There is mayhem on Dalal Street, second lower circuit for the second time in about 10 days. The question is, what should one do now? And serious market dislocations cause, reflexively hurt the financial stability as well. So what to do in a time like this? Ramdev Agarwal of Motilal Oswal Financial Services joins us right now on the show to talk about that. Mr. Agarwal, good having you. Thanks much for taking the time out and speaking to us at Bloomberg Quint. Promoter, when people announce buybacks, they believe that there is not just the business sentiment that is pricing in rock bottom, but also economic sentiment that might come around. You have done this. Is this a sign that you believe that the prices are factoring in the worst?
Yeah, I mean, if not, it has factored in the days to come. Clearly, I mean, this reminds me of my experience in 2008-9 and 2092. So I have seen in my 35 years, 3 this size deluge, in the sense that the corrections of this type, which is once in a decade kind of situation. And in second decade, this is the one, and we are facing right now. So clearly, price and value correlation will break down, in the sense that price will go well below the value, underlying value. And the value is best understood by the owners of the businesses. And when we say we will pass a buyback resolution, it's an enabling resolution. And because you cannot just go and buy back your shares. So we have enabled a resolution. Unfortunately, there is a 20% tax. So I can pay 20% lower price than the price I could have paid otherwise. So anyway, I think now starting in all the companies, I think you will see price definitely touching value and probably even lower than value.
How are you determining this value, Mr. Agarwal? And not just for your company, but I'm just asking market-wide, because when these dislocations happen, and I've heard a lot of people say that this is something that is a bit of an unprecedented event, because we don't have a template for this in the past, at least in the last 20 years. So how are you judging what's happening in the market right now, and what could happen to economy and markets going ahead in the next 3 months?
No, there is a template, in the sense that this is not about coronavirus or lockdown or anything like that. This is about the fear. And the fear, as I said 3 times, I mean, like in 2008, there was a massive fear about the world coming to an end because of the global credit crisis and mortgage crisis in US. And so, I mean, of course, reasons underlying will be different. In 2000, it was a dot-com bust. In 92, it was a Harshad Mehta collapse. So these things do happen. And the framework is that of how do you handle fear? Because there are only 2 emotions in the stock market. It is greed and fear. Right now, clearly, market is in the grip of intense fear. Can it become even more intense? That it's a unknown territory. I mean, now you can go by what has happened in the past. I mean, worst has been in 2008-9 when it went down by 65%. And again, valuations were where even now valuations were almost same as that was in 2008-9. And US, mother of all the markets, they also they are trading at almost 1.8 times to GDP before the collapse. So everybody was saying that collapse had to happen. Nobody knew it is going to happen because of the health reasons, the coronavirus and those kind of things. But ultimately, the impact is not because of coronavirus fear. It is about the second impact, that is the impact on the businesses and the damage to the franchises or the business per se. That's the fear in the stock market. Airlines are shut, hotels are shut, tourism is shut. Now all the automobile companies are shutting down. So, I mean, of course, this is for 2-3 months or maybe a few weeks here and there. But share market is extrapolating machine. The market says, I don't know what is going to happen next month or month after that. It is for the investors to figure out. But today I am extrapolating whatever is happening now well into the future. That happens in optimism or greed, and that is what gives the greed. And right now downturn is being extrapolated, so that is out of fear.
You reckon, Mr. Agarwal, that concurrent demand and supply shocks at the same time can actually take the prices lower? I mean, 2008, in that sense, was it slightly different than what the current situation is, or would you believe it's an apple-to-apple comparison?
No, no, no. Never it is apple to apple comparison. Particularly the backdrop in which it is happening is very different. One, there is a huge social media. You are by the minute you are connected to the world. In 2008 also you are connected, but now more so with the WhatsApp, internet on the phone. I think everybody is like there is no big difference between whether you are in US or here. You're just talking to everybody. So seamless global connectivity with social media around. So that's a big difference. And second is the reason underlying, in the sense that that time it was a credit collapse, so it was a straight business issue, banking issue. This time it started with the health, and now the health is giving kind of birth to business issues. I mean, where if there was only coronavirus and the world was functioning, see, the crazy thing about coronavirus is that solution which is found is the most primitive right now because there's no vaccine or there's no antidote. So they're saying that just lock down the whole world, not even city. And you might have seen till China was locked down, still we made a new high in the world. I mean, US made a new high despite China was locked down. When it started spreading to Iran and more particularly Italy, Europe, and it started knocking the door in US, then all the hell broke loose. So it's all about fear of end of the world. And that behind that, what is the story? That will always be different, of course.
So let me ask this to you. Almost everybody is using this statement right now that when your own house is on fire, you don't bother about the outhouse. The foreign flows, which are, well, going out, yes, will they take a really long time to come back? And if that is to happen, Mr. Agarwal, whenever this issue ends, we can't quite time it, so I'm not asking you to time it. But whenever this issue ends, will the money take time to come back? Because India too, in all probability, will see economic dislocations. We don't quite know how worse this situation will get in India. For now, it's contained, but we don't know if this will spread.
Let me tell you, the stock prices are not made by a buyer or a seller, because for every buy there is a seller, and for every sell there is a buyer. The color of buyer and seller could be different. If FIs are selling, the companies are buying, HNIs are buying, domestic mutual funds are buying, LICs is buying, insurance companies are buying. So there is always buyers and sellers. The stock price goes down despite buyers and sellers being equilibrium is the fact that there is an opinion, the negative opinion. So today's opinion will make today's price, tomorrow's opinion will make tomorrow's price. If the world is fearful today, and we don't know whether tomorrow it will reverse or for some reason it will reverse, it will reverse for sure one day. I don't know what is that, which day is that. Then I'm quite sure there'll be 2 or 3 10% up circuit, and you will not get the stock. I mean, you'll bring all the, whether it is FI money, domestic money, you'll not get the stock. Today, you ask for 100,000, you get 1 million. So today it is it is buyer's market. At some point of time, it will become completely seller's market. So the best time to buy is when it is a buyer's market, and it is a deeply buyer's market. And if you know the underlying value of the company, that okay, if I'm running any company, and if it say Motilal Oswal, I have the benefit of having a company which is listed, but please don't take it as anything. I'm just giving an example. Say my company's own book value, say 220, 230 rupees. Now the stock is quoting at about 500 or whatever. I don't know. I've not seen the price today, but it might be quoting at some price. Now, what is the underlying value? And what is the franchise value, in the sense that what is the earnings power of the company? For any company, irrespective of the name, I think what on a net worth it can earn, if you keep it simple, if it can earn, say, risk-free 10%, I would say price to book 1. If a company, even after, I'm quite sure Corona is not end of the world. In 3 months, 6 months, 1 year's time, whatever.
Okay, I think we'll just try and repatch that feed with Mr. Agarwal, but it'll be interesting to know what is his thought about whether this is time-bound or otherwise, and then talk more about what was happening within the country as well, and how could we look at Indian investments. We'll continue this discussion after this very, very short break.